There is money sitting in your retirement account right now that may be working much harder or much less efficiently than you realize. If you own a target date fund, a 401k, an IRA, or almost any professionally managed retirement account, chances are you already own pieces of more than 3,000 American companies. But do you actually know what you own? Most investors can name Apple or NVIDIA. Few realize they can own nearly the entire U.S. stock market with a single investment. And that's exactly what Vanguard's Total Stock Market Index Fund, ticker symbol VTSAX, was built to do. So today we're putting that fund under our video light. VTSAX, the Vanguard Total Stock Market Index Fund, Admiral Shares, using its April 28, 2026 prospectus and Vanguard's own published numbers. We're going to walk through 5 things about this fund. What you actually own when you buy one share, what it costs, down to the dollar, what it has returned over 10 years and 25. Then number 4 is where the phrase total stock market stops meaning what most people think it means. That one surprises almost everyone. And number 5 is the quiet detail that decides how much of your return you actually keep. Stay for that one, because it never shows up in the headline numbers. The main points. Point 1. One purchase, 3,484 companies. Look at your own portfolio tonight and count how many businesses you actually own. Most people can count them on 2 hands. VTSAX holds 3,484 stocks as of May 31st, 2026. Large companies, mid-size, small, even micro-cap names, because it tracks the CRSP-US Total Market Index, which covers essentially 100% of the investable U.S. stock market. The minimum to get in is $3,000, and the share price sits at $179.63 as of July 2nd, 2026. The fund itself holds $2.3 trillion. That is not a typo. Trillion with a T. One purchase, and you own a slice of nearly every publicly traded company in America. That's the whole pitch, and it's a real one. Point 2, the fee, down to the dollar. Here's where that 0.72% from the open comes back. VTSAX charges 0.04%. Vanguard's own prospectus runs the math on $10,000. $4 in year 1, $51 over a full decade. Now hold that against the average similar fund. On a $100,000 balance, 0.72% is $720 a year. VTSAX costs $40. That's a $680 gap every single year before compounding does anything, on money that was going to sit in the market either way. And the fee table is clean, top to bottom. No sales load, no purchase fee, no redemption fee, no 12B1 marketing fee. The one line worth knowing, a $25 annual account service fee can apply to certain accounts under $5 million, and Vanguard lists the ways it gets waived. Point 3, the track record you can check. On July 31st, 2016, one share cost $54.23. Today, $179.63, and that's before counting dividends. With dividends included, the fund averaged 15.03% a year over the past 10 years, a cumulative 305.58%. Since inception on November 13, 2000, it has averaged 9.11% a year. And remember what that stretch includes: the dot-com collapse, the 2008 financial crisis, and the 2020 crash. Just as telling is how closely it hugs its index. Over the past year, the fund returned 23.15%. The benchmark, 23.10. 0.05 of a point apart. For an index fund, that gap is the report card, and this one comes home with straight A's. Point 4, total market doesn't mean what you think. This is the one I promised. Close your eyes and picture 3,484 stocks. You probably imagine your money spread evenly, a little in everything. It isn't. The index is weighted by company size, so the giants dominate. As of May 31st, 2026, technology alone is 42.3% of this fund. The single largest holding is NVIDIA, a $155 billion position. Add Apple, Microsoft, Amazon, Alphabet, Broadcom, and Meta, and the top of this fund looks a lot like a big tech fund with 3,400 small passengers riding along. Vanguard rates it a 4 out of 5 on its own risk scale, and the prospectus specifically warns the fund's performance may ride on the condition of the information technology sector. The history backs that up. Down 19.53% in 2022. Down 20.87% in a single quarter in early 2020. Broad does not mean gentle. Point 5, the quiet detail. What you keep after taxes. Two funds can post the same return and leave you with different money because trading inside a fund creates taxable events. VTSAX barely trades. Portfolio turnover was about 3% last fiscal year, against funds that turn over half their holdings annually. It pays dividends quarterly, $0.5037 per share in June 2026, a 30-day SEC yield of 1.01%. And Vanguard publishes the after-tax math. Over 10 years, 15.03% before taxes, 14.57% after taxes on distributions, less than half a point lost per year to the tax drag. In a taxable account, that half point is the difference nobody brags about, but everybody keeps. Let's bring it all together now. Set the numbers down for a minute, because the hardest part of owning a fund like this has nothing to do with expense ratios. Go back to March 2020. The country was locking down. Nobody knew if the economy would function in 6 months. This fund fell 20.87% in 1 quarter, the worst quarter in its recorded history. Real people, maybe people you know, looked at statements showing a fifth of their life savings gone in weeks, and they sold. You can understand why. It felt like the responsible thing to do. The very next quarter, the fund rose 22.08%, its best quarter ever, back to back with its worst. The person who sold in March locked in the loss and missed the recovery. The person who did nothing, who may have felt sick every time they opened the app, watched it come all the way back and keep going. Here's the longer version of that same story. $10,000 placed in this fund at inception in November 2000 grew through 3 separate crashes to roughly $93,400 by mid-2026, a cumulative 834.28%. Not because anyone timed anything, because somebody was willing to be bored for 25 years. The wealthiest investors are rarely the smartest people in the room. They're usually just the most patient. Good investing tends to be dull, and that's exactly why it works. Key takeaways and conclusion. So here's VTS in plain language. One fund, 3,484 U.S. stocks, $3,000 to start. A 0.04% expense ratio against a 0.72% category average. A 15.03% average annual return over 10 years, tracking its index to within hundredths of a point. Real concentration risk. 42% technology, and real drawdowns, like 2022's 19.53% loss. Low turnover and quarterly dividends that keep the tax drag small. None of this is a recommendation to buy or sell anything. This is education, not personal financial advice. But now you know how to read a fund like this one, starting with your own. Your homework tonight, look up the expense ratio on one fund you already own. Just look. And down in the comments, tell me this. What was the first fund or stock you ever bought? How old were you? And knowing what you know now, would you buy it again? I read every story.